Interesting. What time is it? 5 minutes until the New York Open. We already filled that. I mean, we spoke about it yesterday. I also mentioned it on Twitter. I wanted to see that daily inefficiency being filled. Let me quickly hide the 1 hour structure and turn on the daily analysis. So if you remember yesterday, towards the end of the stream, we talked about this daily volume profile inefficiency. I also reposted it on Twitter another time, and we've actually been talking about that, since the beginning of the year. Where are we at? Tape reading, trade ideas, weekly outlook. I think in weekly outlook that should be. Nope, trade ideas. Where's the thread gone? No, I guess it's not active anymore. Well, I'll have a look around after the stream. But we've been talking about this daily volume profile inefficiency and this daily bullish share value gap below sell side. Yesterday, we officially shifted market structure. Now we have filled and also hit the 50% of our most recent IPTA 20 trading day range. If we drop it down to the 1 hour time frame, we can see that we perfectly filled in our daily fair value gap here and also our hourly fair value gap, which hasn't been filled before. So let's see what we're working with on the 15-minute time frame. Let me just ping everyone. Make sure the YouTube stream is running too before the New York session starts in 4 minutes. Yeah, perfect. All right, we already have 9 people watching. So let's get the party started then. Open the chat. So knowing that we filled that inefficiency, I'm only going to be paper trading today. The week has been generous enough. Oh, sorry, now I have to mute my computer so I don't hear myself. All right, logged in on the paper account. What did NFP do? Continued lower. Now we shifted structure on the 15, moving back towards our Asia session buy side liquidity. Let's mark that up. Move it over to the 5-minute time frame. 8:20, 8:25, 8:30 with a nice little liquidity sweep at the low of the day. No, actually not a bad setup here. Nice 2022 model. But you never know. Some NFP news events are like this, the other ones are like that. Not really too worried about it, about missing out on an opportunity. We caught the 2022 setup from the low yesterday for 15 points right here, also on stream. We entered on this bullish value gap and let it run back into the high of the day. We even continue higher one more time, and then we mentioned the potential short setup right over here. Basically, once we started to invalidate this bullish fair value gap, turning it into a inversion fair value gap. We've been doing some daily analysis at that point in time, but before we were initially looking for a long of this bullish fair value gap. But I also mentioned that once we see the close below, we're very likely going to attack short-term lows right here and right there with a higher low to the left and a higher low to the right. And that's exactly what we did, and then we just continued to sell off from here. And once we saw that close below the inversion fair value gap, or below the initial bullish fair value gap, we had green light. And same thing here, also with a inversion fair value gap. So we could have either used the inversion fair value gap, the breaker block, or even this bullish fair value gap. And that's exactly what I used yesterday for that last trade of the week on my accounts. Bullish fair value gap right from the low of the day for a nice little scalp back into the high of the day. All we ever left behind today was lower lows and lower highs. The only time we really swept a lower high was right here, and then we continued further to the downside, setting up for NFP, trapping traders short, making it look like it's gonna go long, already shifting structure here, leaving behind a bullish fair value gap just to trap enough traders long before NFP. Take out that liquidity very quickly and then reverse it on them after both longs have been liquidated with the short and new shorts have been trapped into the market. One more time, turning it around on them. We just hit the midnight level and got back to our new day opening gap, this gray box here. We're above the VWAP. We had a new market structure shift. Already used this bullish fair value gap to deliver for 8.5 points, roughly into our midnight level. Let's see, check out the 1 minute time frame. Even on the 1 minute, we went above our pre-NFP high at 820, left behind a nice bullish fair value gap, consolidated a little while in it, and then we left it. So you could either take a chance after the confirmed market structure shift on that highest bullish fair value gap, or wait for the confirmation until we leave this bullish fair value gap, and then on the next best discount right here. And then just follow price, which keeps on going higher, respecting discounts on its journey to potential Asia session buy side right up here and our current high of the day. But we're not going to be trading on the 1 minute time frame. I'm going to be focusing on the 5 minute time frame. Much calmer and relaxed. For an early entry into this reversal, we could have also used the 5 minute inversion fair value gap right here. You can see that we closed above it right here at 850. And then we came back to retested, and at this point in time, after we closed above it, we could have at least taken a little scalp into buy side liquidity for another 5 points. If you know how to make your 5 points per day consistently, it's getting really easy. You don't have to really force a specific model. You just have to have a good feeling on what's going to be that next draw on liquidity, and you should be fine, really. That's cleared, relative equal highs right here. Then we have that midnight level, tiny fair value gap. Retesting our previous day's low. Don't have a new fair value gap to potentially enter on, maybe on a 1 minute time frame. But I'm going to be waiting for a nice opportunity on the 5 minute. Practicing patience. So twice we had the opportunity post NFP and prior to the New York Open to look for quick scalps, just based on the narrative that price tells us, if we really practice reading it and understanding what it wants to tell us. At this point in time, inversion fair value gap, closing above the bearish fair value gap. All right, we have the VWAP as support and a new bullish fair value gap. Let's try a quick scalp. Stop loss below the slow, leaving behind a new bullish fair value gap, and after having shifted structure, taking this entry, I'd say it's a little bit more risky because we're getting closer to the New York Open. We continue to push. But same thing here, if we would have closed below this bullish fair value gap, we could have taken off some risk or exited trade entirely. In this way, we can keep our losing trades very small and our winners bigger than our losing trades. Let's see. 5-minute time frame. We have a nice unfilled bearish value gap just above our Asia buy side liquidity pool. We can measure our last manipulation to look for potential targets. After the confirmed market structure shift, breaker block plus bullish fair value gap, 2 standard deviations would take us right up to our previous day's high, right to this level here at 4766. Do I feel like I missed out on something because we had a pretty clean 2022 model here? No, not really. It's part of it. Gonna find yourself missing out on many opportunities. Doesn't mean you have to always be involved. And for me, that, yeah, mainly goes if we have an NFP Friday. Let's see if we have any questions in the YouTube chat. Always feel free to, hey Khalid, ask me questions if you have them. Always happy to answer them. Good morning, Fady. Fridays, for me at least, are not the days where I'm trying to make the most amount of profit for the week or trying to recover my already existing drawdown for the week. They're more about capital preservation for me instead of, yeah, capital generation. Usually doesn't play out as well trying to force something on Friday just so you don't end up with a red week, for example. Asia buy side liquidity taken. That's done. Let's see if NQ did the same thing already. Same setup here on NQ. NFP to the downside, market structure shift, bullish fair value gap. The inversion fair value gap setup wouldn't have worked on a 5-minute time frame here on NQ. Let's see. Yeah, NQ is also already above the high of the day, forming a new high of the day as we speak. And after 1, 2, 3, and 4, let's say 3.5 days to the downside, this could have been that last manipulation move for a retracement back inside of the range. We've been looking on the higher time frame. If we go to the daily here on NQ, we spoke about that yesterday, about a potential retracement into our breaker block here on the daily time frame paired with the bearish fair value gap. On NQ, we now also filled in this entire volume profile inefficiency. We spoke about that yesterday. And we have another daily bearish value gap coming in right here. So we have room to retrace after, yeah, we started the sell-off at the beginning of the year on Tuesday, continuing on Wednesday and Thursday, 3 down closing candles in a row. Did anyone, where would you put the neutral zone? Consequent encouragement of this entire move? Well, I'd say it depends on which move you're looking at. PD array. No, it doesn't show it to me on the daily time frame. Right here on our bearish fair value gap. So if this is going to be a potential short to intermediate term low for the retracement into these fair value gaps to potentially continue lower and take out the IPDA 20 low, if it wants to do that, of course, then yeah, I'd say a retracement back into our breaker block, bearish fair value gap, and 50% / consequent encouragement here on the daily could be likely. I mean, we can even take a look at the volume profile of this entire move to the downside. And we see that we have that inefficiency right up here. Could even look at the beginning of the year on 2022 and compare it to, was it right here? Because not right here, our old all-time high. We also saw a, okay, that was during November, 1st of December. On January, we actually started to sell off, but we had some sort of distribution happening up here, basically. We saw little bits of a seek and destroy pattern, and if we take a look at that on ES, actually, where are we at? We can see that same thing. We put in a high, a low, and a higher high. We break that higher low, forming a market structure shift and forming a new lower low. We push back above. We go almost all the way back to this low, push another time to the upside, and notice that we didn't do that on the daily time frame here on NQ, so we even had SMT divergence at the high. And then we used bearish fair value gaps heading into mid-January here. So we also started to sell off at the beginning of last year, January 2022, leaving behind bearish discounts, but not really shifting structure anywhere. I guess this could have been viewed as a market structure shift. Higher high, short-term low, higher low, higher high, market structure shift, pull back into a bearish fair value gap, and then we really started to sell off and accelerate, taking out that low of the fourth quarter of 2023. And similar to that, we would be talking about, low of quarter four 2023 would be right here. Don't really think that's in the cards, but of course I also don't want to. If we get to this level, we will know. I like to take it step by step, and that first target, if we continue further to the downside after this market structure shift, would be that IPDA 20-day range low. We hit that 50% level now. We shifted market structure also on NQ. Let me move over there. But I also wouldn't be surprised, like we saw it in 2022, late 2021, early 2022, to get some sort of distribution at the top, where we make it look like it's going to go long and continue to rally, just for market makers to sell into all the new buys, distribute their long positions. But that's the best information we have right now. We retraced on both charts here, filled the daily volume profile inefficiency, plus bullish fair value gaps that we have left behind. By doing that, we also shifted structure. So the question is, what are we going to trust more? Did we just fill in the inefficiency, and by doing that also shifted market structure? But the market structure shift could be considered a fake market structure shift, and we gonna continue higher into further buy side liquidity? Or did we just fill this volume imbalance if we're going to retrace, hit the breaker block paired with bearish fair value gaps to continue lower? Could be viewed in both ways. But now let's drop it back down to the lower time frame, daily analysis. Let's get rid of that. 5-minute time frame, see what we're working with. So we already filled in this entire bullish fair value gap. That's unfortunate. I wanted to see if we can practice a little paper trade here. We might still get our entry. Swing trade if you want to do that, not me. No, I just like to be aware of what's happening on the higher time frame. Not that I'm particularly going to go short based or long based on the higher time frame, the daily time frame. Bullish fair value gap. Since we're above the midnight level now, that would be interesting if we just delivered back into the high of the day. This wouldn't be a trade that I would take on my funded accounts, but just for the sake of this tape reading live stream, let's try to go long with one contract here, target 5 points. Just target that new high or maybe one standard deviation. And if we see the close back below the midnight level and our bullish fair value gap, this idea that price is going to continue to run higher would be invalidated for me. Of course, you sort of have to find the line. If you want to go long at the high of the day, there were better opportunities before we took out that buy side liquidity to go long, for example, right here, or on that inversion fair value gap if you had a good feeling, or if you just want to put in a feeler trade. But we understand that the market doesn't always have to reverse immediately. As long as it's respecting bullish discounts, we can happily continue higher. And the only time going with the trend or going with the flow will fail if we are going to reverse, and by doing that we already get that first indication of price not respecting bullish fair value gaps. And that's oftentimes that first little hint or sign that we could almost take the short if the long didn't play out. Like for example yesterday, we tried to long here, but we understood that if we're not going to hold support here, which we didn't, we closed below it, we can already enter short and target short-term sell side below those short-term lows. Same thing goes for here. We're running in profit. And I used to really struggle with that, taking continuation entries with the trend, while also using ICT concepts. But the best thing to do to improve that and grow would be just to, paper and demo trade it. Build the confidence. And then maybe do micro trades, continuing with the trend. With very strict risk management, if we see the close below, not really interested in holding on to this trade, because at this point in time it already said, if it would be a book that we're reading, bullish order flow isn't being respected here. Now let's see the first red flag. That's at least how I like to look at it. No rocket science or anything. Bullish fair value gap. We use it as invalidation. If we use it as an entry fair value gap, would have done the same thing right here. I'm not placing my entry right here and my stop loss all the way at the low. If I'm using this fair value gap to enter, I have a very specific plan in mind. I want to see exactly this, hold support here and continue higher into the buy side for a quick scalp. If it closes below, that's already going against my plan, so why should I keep on holding it just because I really want to see that buy side being taken? And I hope it's still gonna turn around. So let's see, this is our 5-minute bullish fair value gap. Then we could be looking at more short-term highs from yesterday to be targeted. Right here. And right here. Then above yesterday's new day opening gap right here. Taking it one step at a time. We have enough time to think about it as well, because we're trading on the 5-minute time frame. You could also do this on the 1-minute time frame. And I this specific approach with closing above and below fair value gaps. I only use it on ES because it doesn't move as quick. It's not super volatile, and it's usually very precise. If it's closing below the fair value gap or above a bearish fair value gap, like here for example, most of the time that's that little hint that you need in which direction it's gonna go. Yeah, I used to when I was trading my future funded accounts. I got that take profit trader challenge going, and I was up, I think, $1,800. And on Thursday, I ended up losing $800 of that. And now I only have, I think, 1,100 or something left. Of course, still theoretically 4%. But I don't know, since I've been trading with the CFD prop firms, yeah, I don't know, it almost feels unnecessary to me to keep on grinding with the future funding firms, because if I were up 4% on my CFD challenge, even if I lose those entire 4%, I still have, 10% left that I could potentially lose. And I really, really, really do like that, because I don't have to instantly be worried like I am right now with the take profit trader challenge that I could blow it, and now I have to actually adjust my risk management just in order to not blow the challenge. Spoke about that a lot yesterday. We closed above the bearish fair value gap. That's a good sign. So if we continue into that next buy side target, would be looking for, let me actually label it as buy side. So especially for beginner traders, I think it's much, much, much easier. I know those CFD challenges might be a little bit more expensive than your typical Apex 90% discount challenge, or even Topstep with their 50% sale right now. Compared to a future funded account, if you ask me, day trader. Well, back in the day, I wouldn't have said that, because I didn't trade ICT concepts with, well, maybe for a little while, but not really. Tried to scalp too much on the 1 minute time frame, and I really didn't have that aha moment at this point in time. But I would almost say everything. You have more room to breathe. You don't have to worry about getting stopped out, or with the end of day trading drawdown, you don't really have to worry about that. You have enough room to breathe. They are a little bit more expensive. And I guess they're all two-step challenges. But in reality, all the future funding challenges are also two-step before you really can get paid out. Yes. So 2 stages to pass, and you would have to deal with spread. But that's why I specifically chose funding pips as my prop firm to go with, because I compared and signed up with, I think, 10 different prop firms with good reputation, comparing their spreads and slippage, execution, and all that kinds of stuff. And because I'm only trading the S&P 500, I looked specifically for the best spread on the S&P 500, and it turned out to be funding pips. I was a little bit surprised initially, because I really thought FTMO or 5%ers are going to provide the best spreads on the indices, but didn't turn out that way. So I started to sign up with funding pips, and I have to say I'm really happy. I almost forgot how calm it can be not having to worry about your trailing drawdown at all times, especially with the Apex funded accounts where you actually have a live trailing drawdown. If you have unrealized profits, let's say, for example, I move my stop loss to break even and it turns around on me and I didn't secure the profit, that would be a $287 loss, even though theoretically I didn't lose it. I just didn't realize it. So we touched the inversion fair value gap now. Let's see if we use that to deliver up higher. We have 30 seconds to go. Yeah, exactly. And day trader, you mentioned that exact point that I just like so much more. I also had towards the end of the year a little bit of a struggle with the CFD challenge. I took on too much risk because I felt like I'm on top of the world. And I was up, I think, 6 or 7% of the total 8% target. And I managed to lose 3 or 4% of that. And yeah, my Topstep, Apex, or Take Profit Trader challenge at that point in time would have already been failed because I lost too much based on my highest account balance. But with my funding pips challenge, as long as I don't break the max daily loss, which is 5%, I think, 5%, my account balance was at 53k of the 54k target, and I was able to lose 14% at that time, so I really didn't have to be worried. And I really enjoyed that. I could just keep on trading, doing my business without that worry in the back of my mind. So we have a bullish share value gap here. We took out the high one more time. Once again, 3.5 minutes to go before this candle is going to close. I'm not worried about the wick. My stop loss is going to be just below this low. Sell one stop. Profit target is going to be 10 points. If this would have been a funded account, I would have simply secured it after 5 points. Also because of the unrealized live drawdown that I have with Apex. I can't really afford letting a trade go against me and go back to break even after it already has been in profit. And after not having that for an entire month, not having to worry about that, I really started to also notice something when I'm done trading for the day. Like you said, last couple of plays I lost. My evaluation is not looking good. Close to 3k, and now only have $1,600 left. And now you already start to think, oh no, I only have 1,600 left. How am I going to manage my risk? Of course, it's just a question of risk management, but it's gonna take you a lot longer to get back to your initial balance because you have a smaller margin to play with. Not having that, I really liked that during that trial period during December. But obviously it depends on the trader and the system he's using. Some people, don't mind it. I also didn't mind it, but know that I experience what it can be like again without all that stuff. I don't know. I don't see the point of why I should start 2024 focusing on future funding accounts more than I should focus on CFD accounts. I want to start building up more capital with CFD funding firms and then pause the future funding accounts for a little while until that's done. Yeah. Let's see if we have any questions on YouTube. Not bad, 70K. How would I get out of 9% drawdown on a 100K account? Good question. Like said, risk management. It's just going to take you a longer time to get out of that drawdown. But if you stay disciplined, I think it's possible. You just have to, accept the fact that it's going to take you a while. You've put yourself into that position. And now you have to dig yourself out of it again, step by step. Risking, very less, basically. Interesting, 10 a.m. We close below the bullish share value gap, but that's typically what we see on ES. If you've been watching my streams for a while now I can confidently move my stop to break even. I think we hit 10 points, did we? Yeah. First buy side target hit. What was I about to say? I forgot. Yeah, exactly. The only time when we really see fair value gaps not being respected, but it still ends up holding, is exactly around these new hourly opens. So here we had that last 5-minute candle of the 9 to 10 a.m. hourly candle. We closed below this tiny little bullish fair value gap, but we still ended up respecting our inversion fair value gap all the way from over here from yesterday. And eventually still continued to the upside. So usually around that new hourly open, so that first 5-minute candle of the new hourly candle, that's where I would either get out before that new hourly candle or not be too specific if it's going to hold a tiny little bullish fair value gap or not. We continue to deliver into more buy side. That's nice to see. Buy side liquidity taken. Buy side liquidity taken. Next buy side target would be right up here. Simply continuing with basically the market maker buy model. Using discounts as an entry. Secure 10 points here. Let's see if we can even push for that next buy side target on the 1 hour time frame. Open up with a bullish volume imbalance. Low, lower high, lower low, lower high, lower low. Yeah, took that next buy side objective without any hesitation within that first 5-minute candle. Nice shoe. Like said, Kartik, it's just a paper trade. If I would have entered with more contracts, I would have left one runner if it would have been on my funding pips account. Secure something around 60 to 80% and let the rest run. Already an accomplishment to get in, even though we missed a 2022 model opportunity right here. Still understanding of, the general understanding of where price is likely going to go. That's already 16 points. Far out. for this little risk. Let's see if we have any other fair value gaps that we can work with. Yep, right up here. "22 seconds to go. Bearish fair value gap. Bearish fair value gap and our previous day's high right up here. Head back to Discord. Perfect. Good on you. First green day after 3 losing days. Which setup did you take, day trader? Did you take that one that I just took on the paper account? Mm -mm -mm. 15-minute time frame. Perfect. Good on you. Let's see if we leave behind a nice bullish discount again. Potential next draw would be our previous day's high. Let me just close the door. Let's take a look at NQ. NQ is not so close to that previous day's high level on a daily time frame. Let's go to the daily on ES. It would be that previous day's high, and we don't have a bearish fair value gap here, but we're moving now inside of this down closing candle, which would be defined as our breaker block. Two minutes to go on the 5. Now right inside of our unfilled bearish fair value gaps from yesterday. Another tiny little one right here. Before we hit Wednesday's high, Thursday's high. Yeah, actually today, the NFP news event was pretty easy. At least a pretty easy tape read. Understanding that, okay, last manipulation. We immediately displaced that very quickly without respecting any of the bearish fair value gaps that we have created on this NFP candle. We close above it, use it as support, continue higher, close above it, leave behind a discount, use it as support, we leave the next discount behind. That's when we started the stream at 9:30. We entered right here. I think we've let it run to this first buy side target, 10 points. Usually don't really look for more, even on an NFP news day. And I don't really mind how many points it's going to run. I don't have to be involved in, a 100-point move or, whatever. You get the idea. That's at least not my style. Fang shoes. And you really saw how easy it was. We didn't really think too much about going long on this bullish fair value gap because we have a very good risk management approach where we don't have to be worried that we're gonna lose so much on this trade. We can already exit early once we see the invalidation of this bullish fair value gap or entry fair value gap. Then of course we could keep on holding until it fails, but that's also kind of tricky with, for example, a live trading drawdown on Apex accounts or basically just Apex accounts. And that's kind of what also conditioned me to, let's say, be a little bit more hesitant holding on to trades. I like to get in, collect my 10 points, and once they're available to secure them, I secure them. Because if it goes against me, I potentially lose $500 off my margin, and I only have a $2,000 big margin. That's 1/4 of my entire equity that I have available to lose at all times. But I don't necessarily think that's a bad thing. In 3 minutes we get a new 15-minute candle. Buy side right above here. We already cleared all that. Now we're right inside of this bearish fair value gap. What's the time? 10:10. So I guess that was the macro delivery, 9:50 until 10:10. Still have some room to go for our next potential draw on liquidity, that previous day's high. We actually inverted this bearish fair value gap. And left behind a new bullish fair value gap right here. But I'm not really a fan of these bigger bullish fair value gaps. Of course, the core concept would stay the same. We could maybe even try to scale in with micros, but because with minis, I mean, safety stop would already be 15 points wide. That's quite a lot. 1-to-1 risk to reward to our target. So maybe scaling in with a DCA approach, the deeper we retrace into this fair value gap, the more micro contracts I would add, 50%. And then if I see the close below it, that would be my invalidation, similar to yesterday right here, where we continued going higher, but we failed to take out more buy side. And once we closed below our highest bullish fair value gap, I actually got out of this trade. So that bullish fair value gap is just a little bit too big for my liking. To just add a mini contract right here at the top. Because it would very likely take a while for us to fill in the inefficiency we left behind. compared to this one, where the decision would have been rather quick if we're going to hold support on this bullish fair value gap, or if we're going to close below it and maybe retrace first before we continue higher, or maybe not. But for the sake of the paper trade live stream today on NFP, let's try it. Let's practice. That's what I'm using these days for, as an opportunity. Safety stop loss. Let's put it below the short-term low. Order rejected. Interesting. Let me quickly refresh. And if you retrace deeper, I'm going to add one more at the consequent encouragement of this fair value gap. Open up with a bearish volume imbalance here. It's 10:15 now. That's a new 15-minute candle. So if we check out the 15-minute time frame, I think it's likely that we're going to get some sort of retracement at least into this 5-minute, unless we remain super bullish. So now we're filled with that first entry. That's an old new day opening gap from Wednesday. But this, risk to reward wouldn't be worth it to me. So please don't copy that trade. Please don't. This one, would have been fine, because the fair value gap isn't, so big. And we could have, if we close below, take a max stop out maybe around 4 points, 3.5, 5 points. We wouldn't have to wait for our stop loss to be completely hit to get out of the trade. We get our invalidation before that, unless we get a huge candle, like for example this one. Only then our safety stop loss will be triggered. So let's see how price plays around inside this bullish fair value gap. This could take a little while. Let's take a look over here at NQ and switch to the 5-minute time frame to see what NQ is up to. 15-minute and 5-minute. Also left behind a nice bullish fair value gap. But by now, very likely, after 1 push, 2 push, and 3 pushes higher, the majority of retail traders are very likely in a long position. So that would be a good opportunity for market makers to put them into margin trouble, or quickly hunt some stops, engineer some liquidity above before actually breaking through this previous day's high. But nothing's ever guaranteed. Just a thought. Let me open up the ICT all-in-one indicator and check for the regular trading hours opening gap. We opened up right here. So we still have a tiny little regular trading hours opening gap right here, this yellow box. But we immediately moved away right after the New York Open. 8:30 open is going to be interesting today. Power of 3. I don't usually use all of the settings of the ICT all-in-one indicator. only the major ones. But that's a good thing about it, because yeah, you can really set it to what you need, and if you want to modify anything, you can do it inside the control panel without having to scroll through all these settings. You just have to set them up once, and then you're pretty much good to go. Let's see if we have another question on Discord. Hey, Bongo Rambo. So let's see if we get our next fill here at the 50% level. Can check out what the 1 minute time frame looks like. Only 1 minute. It starts to respect bearish fair value gaps here. That's simply why I don't like these big fair value gaps, because so much can change on the lower time frames within such a big fair value gap. But right now I still like how we hold support on that old new day opening gap. We already ran quite a bit. We caught our long off this bullish fair value gap, the first bullish fair value gap after this one right here that we used to deliver into buy side, leaving behind a new discount, simply entering on that discount. The same thing we're trying here, just for practice basically. But I think, just to give you a reason why I'm not trading live today, this trading week has been very well on all my accounts. We had yesterday's 2022 model on the live stream. I didn't take the short because I already made my profit for the day. Then on Thursday, no, on Wednesday that was, we, inside the London session, I alerted the short idea right here. We had this unfilled volume imbalance and this low. I wanted to see it certainly close below this unfilled volume imbalance. We kept holding support once, twice, 3, 4 times. Then we nicely closed below, leaving behind a nice bearish fair value gap. We also had that midnight opening level, just around this level. So I had, I think, something around 4 confluences of why we actually could continue lower. And of course, my higher time frame draw on liquidity, fill in these PM session power hour fair value gaps, basically, all these inefficiencies, and we took the short. So that was a nice trade. And then during the New York session, I think, let's see, if I remember correctly, 9:30 opened up. We didn't do anything until 10 a.m. We continued lower. Did we? Or did we trade it on the 1 minute time frame? I'm not really sure about it anymore. Then 10:30. Didn't get the market structure shift confirmation. I think we made most of the profits during London, and I just kept on holding. Nah, I remember now. So right here we had these 2 equal lows, And just after 8:30, I got in on the short once we closed below this bullish fair value gap here. That was basically the same thing that we already saw before. We had a fake market structure shift right here, leaving behind a bullish fair value gap and a potential breaker block. But we didn't really hit major sell side liquidity, so I didn't think about going long here. I wanted to see it close below this bullish fair value gap. And then once we close below that, use the inversion fair value gap retest to continue lower. I got in on my accounts right here with this volume imbalance for the continuation lower and kept on holding all the way, I think, until here, and then we caught the very low. Now then we sit through news, and we sat through news, and I was looking forward to target, where are we at? This sell side liquidity. And once we hit that, I was out of the trade. Yeah, that was it. And then on Monday, during the PM session, I alerted this 2022 model here. Market structure shift, bearish fair value gap paired with breaker block, continuation into sell side. And then, of course, that London session based on our hourly bearish fair value gap paired with the tape read that I did inside the VIP tape read channel. Highest bullish fair value gap. We started to, not respect it, and we started to leave behind a bearish fair value gap. Then we started to respect it and continued lower from here, forming a high, higher low, lower high, lower low. And at that time, I just jumped in with a market order looking for short-term lows being targeted, and I let it run all the way to the Asia session low. Then I eventually got out of the trade, even though, we just simply kept on continuing lower. But like said so often, I'm not really there for the 100 point scalps or 200 point scalps. I'm really happy if I can get my average 5 handles per day. That's all I really need at my stage. We all tend to have the eyes of a swing trader, but the patience of a 1 minute time frame scalper. But that only, gets better with time. So let's see, we had a nice bounce of our old new day opening gap. Is this going to be the next higher low for the continuation above the short-term high? We will find out. One minute time frame. Yeah, and just again to this big bullish value gap. Why I don't like them is because, within this bullish value gap, we could completely change structure on the 1 minute time frame, if you know what I mean. High, higher low, lower high, lower low. Not really a fan of that. But it's still good practice to engage, even on the opportunities you wouldn't normally take on your funded account or your challenge, to make yourself remember why you don't do it. Let's see if we have any new questions. Nope, we do not. And see that NQ is also holding this bigger bullish share value gap. looking like it wants to continue higher on the 5 minute at least. Do you guys have some other charts you would like me to check out and see what NFP did? We can do that today because I'm not putting my full focus on the S&P, because today I'm not trading live. So I'm happy to skip through charts, look at gold, oil. If we have some requests, feel free to just put them in the chat. Nine seconds to go. 6, 5, 4, 3, 2, 1. Done. It's still pretty cool that we didn't leave behind a new bearish fair value gap on the 5 minute. But we also, after creating this volume imbalance right here, we didn't close back above it. So the candle bodies respected that volume imbalance perfectly. And we use that inefficiency to deliver lower and likely gonna form a new short-term low, or at least take out the most recent one. Now it's time to wait and let this play out. That's the thing I don't like about, like I said a couple of times about these bigger fair value gaps, to use them as an entry. I don't know, it just takes too long most of the time. But we're here until 11 AM. And let's check out some other charts now. Let's see. No, don't want to do that. Let's see what happened on... Let's do oil. We've been looking at oil most recently. During the streams. Go to a higher time frame first. Not too much of a movement compared to the other days with the NFP news candle. You would barely notice that we had NFP here. You would think, oh, NFP must have been somewhere here or maybe on this explosion or moved to the upside. But based on lower time frame, 8:30 have barely any movement, to be really honest. First day we opened up, kept respecting bullish fair value gaps. Now, don't really like what oil did today. Let's try to take a look at EU. See if we find a better setup there. Yeah, very similar to what we saw on ES. I like that. We took out sell side. And then we left behind a nice bearish value gap. We immediately closed above it. Right here on this candle at 850. We retested it and continued higher, confirming the market structure shift at 9 AM, new hourly candle. Leaving behind a discount. Filling in that discount. Using that to once more deliver up higher. leaving behind a new discount, wicking that 2 times, going sideways for a little while and continuing higher and leaving behind a new bullish discount and using that to once more deliver higher at 10 a.m. Basically, yeah, almost exactly the same chart that I have been dealing with here on the S&P 500. We had that last sell side liquidity sweep, that last manipulation move, closed above the bearish fair value gap, used it as support, shifted structure at 9 a.m., leaving behind a discount, using that to continue higher. Then at 9:30, leaving behind a new discount. At 10, we had that last pump. Now dealing with that big bullish fair value gap. Same goes here on EU. Almost identical. Too funny. And that's a measurement for how EU could likely run. Could measure that last manipulation move. No, not PD array. Standard deviations, ICT. See how almost perfectly 4 standard deviations of that last manipulation line up with our previous week's high. The high of the 28th of December. That's interesting. Hourly time frame, nice double bottom formation with a nice rejection wick at the low. Now, actually surprised that EU looked so much similar to what we saw in ES. Just with one more fair value gap right here. Or now right here. Did anyone trade EU today? Juicy, I think you said that. Hit my 1-to-1 TP on EU. Well, you could have simply followed what I said here on ES and used exactly the same stuff here for EU. Really, really, yeah. Don't want to say easy. That's hindsight speaking. But, well, market structure shift, bullish discounts being respected. Why should it stop here right now? If we still have the Asia session high to go. That's the same reasoning I used here on ES. Now, actually on ES, we didn't take out the Asia session high at that specific point in time. We already cleared it, leaving behind that bullish fair value gap, and then we entered long. So in my opinion, even a better opportunity here on EU. Because we didn't take out that high of the day here, that Asia session high. We just took it out with that 10 a.m. push, already hit that previous day's high, and now we're starting to, well, very likely distribute, consolidate. I think the major target has been delivered, or at least a target for me. Nice Friday. So let's see if we can get the continuation before 11 a.m. 10:30, that's a new 15-minute candle. So now we have a new 15-minute bullish fair value gap right here. See if we feel the need to fill that before we continue higher. We also close above the volume imbalance now. And after closing above it, looks like we're starting to hold support on it now. Let me actually draw it in. Let's take a look at gold. Previous week's high. This red line, I'd say, would be that similar draw on liquidity that we're looking at here on the S&P 500 with our previous day's high draw. GC. That's gold, right? Yeah. Gold futures. Yeah, I mean, what can I say? Starting to be a little bit repetitive. Take out sell side, we take out the low of the week here on Wednesday. We don't typically engage right after NFP news. So I wouldn't just, take a short right after that, because we just took out sell side, and it's also a very big bearish value gap. But within the next 5, 10, 15, 20 minutes, it already started to look like, okay, V-shaped recovery with momentum. Then we get our displacement plus market structure shift for the continuation entry. Also back above the Asia session high, London session high, and a strong run to the upside. I think today was a fairly easy tape read. It doesn't matter if you traded gold, EU, the S&P 500. They all looked, very, very similar. So let's see. Few people watching, still watching. I really appreciate it. I know we don't have thousands of people watching like, all these other Twitter influencers, but you can really use it as an opportunity to ask me a question, because it won't be lost in the chat. I also really like, just having that smaller audience instead of that super huge audience. As of saying that, more people leaving. Well, I don't mind. I think I'm sharing some good value here. If you do agree with that, then you're very likely gonna follow the live streams. Hopefully give it a like. We already have 10 likes. That's awesome, guys. Thanks very much for that. Let's see if we can hit that next short-term high. There's a little bit of a movement. Is already 175, almost 5 points with one mini contract. Otherwise, we're just gonna end the stream, getting closer and closer to 11 a.m. If there are no more new questions. And then I'm gonna leave the charts finish the week up, finish the rest of my journaling, and yeah, call it a week. Enjoy the weekend. Start preparing the weekly outlook for the VIP members on Saturday, Sunday, and then yeah, get started for the next trading week, I would say. I'm gonna see how Friday's candle is going to close. That's gonna be interesting for the weekly outlook, and how we can potentially continue next week. When we will see about that. Still have the PM session and the remainder of the AM session to go through today. NQ already formed a higher high and is also getting closer and closer to our previous day's high and that daily bearish fair value gap, while ES is struggling to form that new higher high. But that could very quickly change. So right now we have a potential SMT divergence, but to confirm it, I always like to say market structure shift paired with it. So if we were to shift structure now, we would have a nice little setup here paired with SMT divergence. Of course, I would prefer the previous day's high being taken before we actually get a market structure shift short to reconfirm it. But for now, I think we're looking pretty good. Let's take a look at the 1 minute time frame. One, two, three. Not really interested in adding to the position again. I think the retracement would be done. It's over. We already hit the 5-point mark at this point in time. Well, I'm not trading my funded account, so let's give it some room to breathe. Sell stop. Being aware of the potential SMT divergence here. NQ forming a higher high, ES with that lower high in place. Really, I wouldn't really like to see it go below this candle slow. Within a given timing window, it's 10:45, so this is a new 15-minute candle. Nice close on the 15. Let's wait and see. And guys, like always, please do ask me questions. Then I have more stuff to talk about. We already covered all the trades we took this week. And already took this trade here for a nice scalp into buy side right here. Now we're playing around in those bearish fair value gaps we left behind yesterday. With potential SMT divergence here. Let's see if we have any questions on Discord. How long have you been doing this? I've been streaming live for, well, I would say I started early summer 2023 on Discord for free, just with the community that has been around for a longer time. You're just doing free live streams on Discord, and then I think during August, September, started doing YouTube live streams. I don't know why, to be really honest, but I also don't mind it at the same time. I really enjoy having that opportunity to have that small community where I can really be, where it's almost like P2P, person to person, very individual, instead of having hundreds of members where it's just harder to manage all of them. I would also I'm not trading live, so I'm just gonna let the setup play out and see how it goes. But we already moved away from the bullish value gap. That SMT divergence doesn't look really nice. Of course, that could just be temporary and we push through it right now, but if it were a live trade, I would also start to protect my stop at break even. Take some partials after 5 points. Not really interested in letting this, form a new lower low and potentially shift structure here. So I think there are two scenarios how this could play out. We're gonna continue to hold and deliver quicker into our previous day's high target. The other scenario would be that we leave behind SMT divergence and we shift structure, continue lower to fill this fair value gap. Really depends. If we're gonna hold this bullish fair value gap, I would look for more short-term lows, like this one right here, this one right there, this one right there, to be a potential next target. But if we're gonna hold support here, I could also see a third scenario where we just quickly do a stop hunt, take out these lows, and then bounce back very quickly, hold support, and deliver into our previous day's high. I still think this is a very likely drawn liquidity for the rest of the week, or for this day, Friday. Very likely that we're going to reach that. Question is how. It could happen during the late PM session and we see some more manipulation right at the high, engineering some liquidity, sweeping the lows, and then continuing higher, or retracing further and start to push again off the midnight level back into our previous day's high. But those are the options I see. That's when it gets kind of tricky if we have these big bullish fair value gap entries. That's why I prefer these ones here much more, because we can get the invalidation of the bullish fair value gap within one candle, 1 5-minute candle. Here it would very likely take us a little bit longer. Yeah, once we hit that day trader, I could see a possible short-term rejection, but I wouldn't fade the uptrend before we get a clear confirmation, at least on a 5-minute time frame for a market structure shift. Maybe a short-term scalp on the 1-minute time frame. I think that could be in the cards. But yeah, I stopped being a fan of waiting for the reversal or assuming that price always has to reverse once we hit a specific buy or sell side target. Especially on these trending days. 1 second, guys, I'm gonna be back in no time. Yeah, it definitely is gonna take some time for you to confidently take these setups. Like said, at the high of the day, going long, there's more risk. But if your drawn liquidity is good enough, well, it's a question of risk management and entry management. But I certainly wouldn't take these big fair value gaps as on my funded accounts. I think the opportunity for the market structure shift 2022 setup, the best one, don't want to say has passed. This would have been the opportunity, and this would have been the continuation entry, low risk continuation entry. Same thing goes for EU. I really wouldn't be spending the rest of the Friday to wait for the next 2022 setup, hoping it's gonna play out just as well as this one did. Exactly, yeah. No, I wouldn't just jump in right here. And that's why I said that, please don't copy that trade or take it. Even I'm just paper trading it here, following price for the sake of the tape reading live stream. This would be something I would still take on my funded account, but maybe just not on an NFP Friday. Yeah, well, like today. Let's see if we can get our close above our bearish value gap here. Take a look at NQ. NQ going sideways here, still respecting the newly highest bullish value gap. And we still have that SMT divergence in place until ES is going to break this high. What's the time? It's 10:55, so that's the last 5-minute candle actually of this hourly candle. Pretty bullish, but majority of the movement happened with the first 5-minute candle. So for reference, the new hourly candle started right here, opened right here, and it's about to close maybe somewhere around here. But almost 90% of the entire movement that we see here on the hourly happened within that first 5-minute candle. Entering now at the end of the candle, without any new structure or bullish fair value gaps to use. Not really a fan of that. I also wouldn't immediately trust a potential market structure shift here, even though we have SMT divergence potentially, because I think the probability for it to just be a quick stop hunt and then continue to the anticipated target, the previous day's high, is still very likely, at least in my opinion. I would wait for proper confirmation close below this bullish fair value gap, but then already your risk to reward is not the best, because like I said, that fair value gap is just too big. Yeah, I would also agree with that, Bongo Rambo. The AM session is really done. We'll see how we continue during the lunch hour and PM session, but I won't be around for it. Opportunity for a nice reversal setup from the low of the day and low of the week presented itself right here just after the NFP news event. I got to the market right after 9:30 and used the first bullish share value gap to take the long. And yeah, for the sake of the tape read, also doing that same thing with the bigger fair value gap here, which definitely, yeah, exposes us to more risk because the stop loss, yeah, it's pretty big compared to here. I would also keep an eye on NQ if NQ is taking out the previous day's high before ES's. Then, and we still have that SMT divergence in place. Not very likely that that's going to happen, but yeah, I would make sure I keep an eye on NQ, especially with this daily bearish share value gap just above our previous day's high. That's potentially where we could start to see some rejection here for a short to mid-term retracement. To attack basically all these higher lows that we have left behind since that NFP news event market structure shift. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Wait for change and then engage. Enjoy your weekend, Bongo Rambo. Until next week. Take care. Let's take a look at US 30. And like we already said, even EU, Euro US dollar, looked exactly the same. Not exactly the same, you know what I mean. Relatively similar compared to the S&P 500. Yeah, same goes for US 30. Low of the week, last manipulation, market structure shift. Didn't retest, or did it? No, didn't really retest the inversion fair value gap and didn't leave behind a nice bullish fair value gap to enter on and catch this last move to the upside. The last fair value gap that we could have used would have been right here. But they're also very similar to ES with that lower high, struggling to get past our old high of the day, or our current high of the day. And same goes for EU. Or does it? Yeah. EU also forming that lower high and now starting to retrace. Likely gonna attack this short-term low and fill in some more of this inefficiency. Once you see those big inefficiencies being left behind and those big pumps, you can already anticipate that that was that last thing that some retail traders needed maybe to, okay, screw it. I didn't want to trade on NFP Friday, damn it, but I really think it could continue higher from here, so very likely they're in a position right now, even though it wasn't really planned. So that's where they might want to start to take some profits, and for someone to take profits, someone else has to lose. It's very likely that last set of traders that jumped in right here looking for higher prices. Can look at the NFP range with the volume profile. We can see that huge inefficiency here and the volume point of control already being above here. I didn't even include that entire consolidation. But I think, that volume profile inefficiency is also very likely going to be filled. ES. Can do the same thing with the volume profile. We don't really need it. We can already anticipate it. It's just a nice visualization, in my opinion. Volume point of control coming in right here. Also with that inefficiency here with our bullish share value gap. That's why I'm saying we don't really need the volume profile. We can already, visualize what it's looking like, what it's very likely looking like, just by looking at, fair value gaps. That's why they work so well. But it's interesting to see that the most amount of volume or transaction that has been put in happened right here around 4739, just by looking at this expansion move to the upside. Not really down here, right here. So if we retrace into this inefficiency, there might be a couple of buyers that want to protect their positions here, adding some more to push price back away from their initial entry. And if we look at the entire range, where we are at right now, you can also see that volume point of control, obviously right now, it's usually where we consolidated or where we spent the most amount of time with price, right up here. Starting to look like that typical P, big volume at the top, and with a little bit of a belly, and relatively speaking to what we see up here, very skinny legs. If we were to draw a little human, like, big belly, a little head, inefficiency right around the neck, with skinny legs. All right, let's see. Do we have any last minute questions? Because that's going to be the end for the live stream and the end for this trading week. I'm going to let this trade sit here, move my stop to break even. We still do have the SMT divergence. So this might end up being engineered liquidity above here. Sweep the low, then shoot back up to take out the previous day's high, or we fail to hold this bullish share value gap and we might continue lower. But I would really look forward to see this inefficiency and volume profile eventually to be delivered in. Offers the potential market structure shift right here. With SMT divergence compared to NQ right here. You can see that NQ kept forming 1, 2, 3 higher highs, while he has really struggled to get past those inefficiencies from yesterday that we drew up earlier, and how well it respected those inefficiencies. Let me get rid of all these little orange markers. We have a 15-minute bullish fair value gap also right here. And on the 15-minute, it would really be hard to frame a 2022 market structure shift short right here. Therefore, I'm simply missing the higher time frame liquidity pool being rated compared to, where's it again? The one right here that I alerted with for the VIP members during the PM session. We retraced higher high, short-term low, and another higher high. We break structure on both the 5 and 15 minute, leave behind a nice bearish share value gap on the 5 and 15 minute with a nice breaker block right here, and we use that to continue lower. That's the textbook setup in my opinion. And right here I just don't see that opportunity to take a short, to really believe that we could retrace all the way back below this low. But eventually, if we measure out this entire range and look for the 50%, looks like it's going to be the midnight level if you have a trained eye. Almost. For a potential retracement, and That doesn't have to mean just because we retrace all the way to this level that we won't be able to make it to our previous day's high. But I think the move for the AM session is done. Now it's a good opportunity to take a little break, reset, if you decide to come back for the PM session. That's at least what I would do if I were to trade today. Because the more time you spend in front of the charts, the harder it's going to be for you to focus and to make a educated decision. You likely already took a loss, or you already had a huge win, because yes, really moved quite a bit today. 50 points. Even if you just took that scalp right here into buy side, that's 15 or 10 points, or maybe even 20 points. Make sure to lock in these profits. Be happy about making 20, 10, 15 points. If it's even just 5 points, don't feel like you left something on the table. The next trade you're going to take, especially with that emotional baggage, most of the time doesn't have the same quality as the first trade that you took. So I'm going to wrap it up. I'm going to call it a week. I think we got stopped out here now in profit. Or in profit? No, at break even. All this consolidation, or relatively small candles compared to what we saw before, it's not really what I'm interested in. We're still holding the inversion fair value gap though, so that's kind of nice to see. But it's just the size of this bullish fair value gap that's making this trade not really attractive to me. But in reality, we enter on a bullish fair value gap. Once we close below it, that's our invalidation rule. It's just because it's the end of the stream and the end of the week. Not really interested in holding this, but the probability of us reaching the previous day's high is very likely, in my opinion. The question is how we're going to deliver into that. 11:10, so it's the end of the 10:50 to 11:10 macro. Maybe we can use that to push through these relative equal highs now. Just one last stop hunt, taking out the most recent short-term low right here with a higher low to the left and a higher low to the right. Still respecting our inversion fair value gap and holding the volume point of control. Did we break it? Almost. Now we have equal highs above. But I don't see any more last minute questions. So that's gonna be the end of the stream. Alright guys, thanks very much for joining in and liking the stream. I really appreciate it, and for commenting in the chat here on YouTube. I'm gonna be live next week for free on YouTube on Tuesday and Thursday. On the other days, I'm trading on the Discord with my VIP community during the New York session and some tape reading during the London session. Alright guys, thanks very much, and I hope I will see you next week. Take care and enjoy the weekend. Bye.